Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now the price of Bitcoin is testing an important line of resistance, while the price of Ethereum is continuing with this breakout to the upside. So in just a moment, I'll be sharing my next price targets and some brand new signals that are flashing right now for both Bitcoin and Ethereum, so definitely stick around. First of all, just giving you a quick update on what the US stock market did today. This right here is the Nasdaq 100 index on the daily time frame, and initially the Nasdaq 100 index actually opened up today's trading day above Friday's candle close. So earlier in the trading day, the stock market, talking about the Nasdaq 100 index specifically, was actually up today, but throughout the session towards the end of the trading day, we've seen a bit more of a pullback for the US stock market just today. And as you can see here, this was just another rejection from that horizontal level of resistance, which is sitting at around 12.1k to 12.2k. And so just going off the technicals, that is potentially one of the reasons why we saw a bit more of a pullback in the stock market today, simply because we ran into strong resistance. But more of a fundamental reason as to why we saw a bit of a pullback later in today's trading day in the stock market. And that reason is due to the news that Apple is potentially about to slow down their hiring. And of course, during this economic environment, that shouldn't really be a surprise. But anyway, because of that news, Apple stock actually fell by a couple percent today, and the reason why that is important for the overall stock market is because Apple is the largest company in the US stock market by market cap, and therefore when it comes to these sort of indexes, talking about the Nasdaq 100 index for example, Apple as a company has a very heavy weighting, which basically means if Apple's stock price goes down, it essentially drags down the entire index. But either way, the Nasdaq 100 index is still trading within this ascending triangle pattern, which is technically more of a bullish pattern than a bearish pattern. But of course, we're still yet to actually break above this horizontal level of resistance that I just mentioned earlier. And in case you're new to this channel, the reason why I'm even talking about the stock market on a crypto channel is due to the fact that crypto prices are highly correlated with what stocks are doing, specifically tech stocks. Now, obviously, the correlation is not one-to-one. We don't have a perfect correlation, but in most cases, if tech stocks dump, we're going to see a dump in crypto, or if tech stocks pump, we're going to see a pump in crypto most of the time. But anyway, speaking of crypto, getting into the Bitcoin part of this video, this right here is the weekly Bitcoin chart, taking a look at that pi cycle bottom indicator, which is made up of two moving averages, and when these moving averages cross over, historically speaking, that has signaled the bottom of these two previous significant Bitcoin bear markets, and we just recently saw the third pi cycle bottom signal flash. Now, if you've been watching my recent videos over the past 1 week or so, you would already know about this signal flashing, but the reason why I'm covering it again in this video is because we actually now have a weekly candle close happening after we saw this signal flash, which further confirms this signal in place. And if we're looking at the only other two times in Bitcoin's entire price history where this pi cycle bottom signal indicator has popped up, in this first example that we saw towards the end of the 2014 bear market entering into early 2015, we ended up seeing these two moving averages cross over, which gave us that pi cycle bottom signal, but that happened around 1 week before the actual bear market bottom. And if you're looking in the second example, we saw these two moving averages cross over and the pi cycle bottom indicator show up in the exact same week as the bottom for the 2018 Bitcoin bear market. And while we're here on the weekly Bitcoin chart, taking a look at the weekly Bitcoin RSI, which recently entered into oversold territories for the third time in Bitcoin's entire price history. And at the time of recording this video, the weekly Bitcoin RSI is currently making an attempt at moving back out of that oversold range back into the RSI band. And once again, before this time, we had only ever seen that just two other times in Bitcoin's entire price history, which both occurred at the bottom of previous Bitcoin bear markets, which is just something to at least keep in mind. But anyway, zooming into the daily Bitcoin chart, and as you can see here, the Bitcoin price is still in that choppy sideways price range in between roughly around 19,000 as our horizontal level of support and roughly around 22,000 as our horizontal level of resistance. But if we're looking at the daily Bitcoin RSI, this is currently still in an uptrend, making higher highs and higher lows. And so while this uptrend is taking place in the daily Bitcoin RSI, it remains very likely that the Bitcoin price is going to either continue to remain in this choppy sideways price range or potentially see a little bit more bullish price action, something like what we saw in the first quarter of this year. And for that scenario to become more and more likely, we need to see the daily Bitcoin RSI break into the top half of the RSI, because generally speaking, that means that we're seeing strength in the price action if we're seeing the daily RSI in the top half, so above 50. But of course, at the same time, if it goes too high up towards around 70, then it starts entering into overbought territories, like what we saw towards the end of the first quarter of this year. And right now, as I'm recording this video, the daily Bitcoin RSI is currently making an attempt at breaking into the top half of the RSI, so above that 50 level. And obviously, it would be even better if the daily Bitcoin RSI breaks above these previous highs that we set back in June, sitting at around 51 to 52 in the daily Bitcoin RSI. But if we're looking back at Q1 2022, we initially saw the daily Bitcoin RSI reach up towards that 60 range, which basically showed a lot of strength in the Bitcoin price, at least in the somewhat shorter term relative to the daily time frame. And then once again, the potential warning signals in the RSI to watch out for is if the RSI enters into overbought territories, or more importantly, if we break the uptrends. Because in both of these previous examples, the moment the daily Bitcoin RSI broke that short-term uptrend, that was the moment where the Bitcoin price itself started the next leg to the downside. But if we zoom into the 12-hour Bitcoin chart, what we can see right here is one 12-hour candle close above this level of resistance, which I've got here at around 21.7k. But so far, as I've recorded this video, we still have no daily candle close above this significant resistance. But when this next 12-hour candle closes, that will also be the next daily candle close. So ideally, if we can see this 12-hour candle close above around 21.7k, that would be great to see, because unless the Bitcoin price can actually close above these important levels of resistance with something like a daily candle close, then we haven't really confirmed a breakout to the upside. So as of right now, it's simply a waiting game to potentially see a little bit more confirmation here for a further breakout like Ethereum, for example. But with that being said, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and what we can see here is obviously the price of Bitcoin on this time frame has broken well above that previous golden pocket level of resistance. And so now that the price of Bitcoin has already broken above these previous Fibonacci levels of resistance in the short term and actually made it up towards that previous high up here, in order to find potential Fibonacci levels of support, we need to actually redraw this Fibonacci retracement tool from the lowest point to the highest point so far. And this gives us the 23.6% Fibonacci level coming to play at around 21.4k approximately, where currently, as of recording this video, we're seeing a bit of a short-term bounce. But the next most important Fibonacci level below that level that I just mentioned is the 38.2% Fibonacci level, which is the second most important Fibonacci level, and that is coming to play at around 20.6k approximately. And anything below that, and I'll be looking towards the most important Fibonacci level, which is the golden pocket, and that is coming into play at around 19.3k approximately. So as of right now, those are the main levels of support for Bitcoin in the short term that I'm currently paying attention to. And now looking at the 4-hour Bitcoin price oscillators, specifically the RSI and the MACD, what we could see first of all in the RSI is the fact that recently we entered into overbought territories extremely temporarily, because the moment that happened, just like what we saw around 1.5 weeks ago, we immediately saw a bit of a pullback in the Bitcoin price. But technically speaking, the 4-hour Bitcoin RSI is still in an uptrend, forming higher lows and higher highs. Now, we did end up seeing one lower low in the 4-hour Bitcoin RSI, but we never actually formed a lower high. So once again, the 4-hour Bitcoin RSI is technically still in an uptrend, which is technically more bullish than bearish, just like the price action itself. We're still currently forming higher lows and higher highs in the short-term Bitcoin trend. So technically speaking, this means the short-term Bitcoin trend is obviously a bullish trend. And now if we're looking at the 4-hour Bitcoin MACD, currently this is showing reduced bullish momentum in the shorter term for Bitcoin. But with that being said, over the past one day, it did actually have one false signal, a false bearish cross. So just keep that in mind. Even though the MACD, generally speaking, is a very accurate indicator most of the time, only sometimes we might end up seeing a false signal, just like any indicator. No indicator in the world is 100% accurate all of the time. So that is why it's always important to look at more than one indicator on the charts and to try and pick the indicators that have the highest degree of accuracy within your bundle of indicators that you use. But anyway, just to summarize the short-term Bitcoin price action at the moment, currently, technically, we are more bullish than bearish, but we are also running into heavy resistance where we do have a bit of uncertainty about the breakout. We haven't actually seen a lot of confirmation for the breakout just yet, so keep that in mind. But speaking of breakouts, heading over to the Ethereum part of this video, this right here is the daily Ethereum chart, and as I've been talking about for a while now on the channel, in fact, just before this bullish move started, I've been talking about how the current time in the market looks very similar to what we saw in the first quarter of this year, which was basically an intermediary phase in between these larger downtrends. But in that specific time period, the price was actually more bullish than bearish when it comes to Ethereum. And right now in this time period that I've been talking about, obviously the price is more bullish than bearish within the larger downtrend. So obviously the larger downtrend is still bearish, I'm not denying that. But in this somewhat shorter term area on the chart relative to the daily time frame, obviously the price is looking more bullish than bearish. And right now, as of recording this video, the price of Ethereum is currently at a very interesting price, because if you measure from the all-time high for Ethereum to the current price, Ethereum is currently still down almost 70% from the all-time high, but from the lowest point that we saw just last month to the current price at the time of recording this video, the price is currently up almost 70%. And so what this means is that right now at the current price of Ethereum, based on what I just said, if, for example, you bought a bunch of Ethereum at the exact all-time high, and then if you bought a bunch of Ethereum at the exact bottom that we saw last month with the same amount of dollars, and if you did nothing in between, so all you did was put in the same amount of dollars at the all-time high and the same amount of dollars at the lowest point just last month, currently you would be at a break even on your Ethereum investment. And now a lot of the people who might be new to investing might think that there's no way that that is possible, because if you look at the price of Ethereum on this chart, it is extremely obvious that the Ethereum price is not currently halfway between the bottom and the top. We're much closer towards the bottom than the top, when in fact Ethereum is currently down around 70% from the all-time high and currently up around 70% from the lowest point just last month. And so explaining this with a real-world example, let's just say if you invested $2,000 into Ethereum, $1,000 worth of Ethereum you bought at the exact all-time high, and $1,000 of Ethereum you bought at the exact low just last month. Once again, in that example, your total investment would have been $2,000, but the $1,000 you put into Ethereum at the exact all-time high is currently down 70%, which means it's currently worth around $300. You've lost around $700 in unrealized losses. But at the same time, the $1,000 you put into Ethereum at the exact bottom last month is currently up 70%, which means it's gained $700 on top of that $1,000. So overall, that first $1,000 you put in is currently $300, and that second $1,000 you put in that example is currently $1,700, making you about break even currently. And now to some of you, especially for those of you who have been investing for a while now, that would probably already be obvious, but there are a lot of new people who have joined the investing world altogether, not just crypto. And so this is an extremely important concept to understand. It's important to understand that the gains to the upside are actually a lot bigger than the losses to the downside. And so it's because of this that dollar cost averaging has historically been one of the best strategies to go with when it comes to investing. Now, of course, that's not financial advice for you, but in an example where you're potentially dollar cost averaging into the market, by doing that, you would almost certainly experience a lot of bearish times and bullish times, times where you might be under or above your initial investment. But during those bearish times where the price is just going down and down and down, if you've done enough of your own research into the investment and you truly believe that the underlying asset will eventually return to those higher prices at some point in the future, then by dollar cost averaging into the market, you would actually return back into profits much sooner than if you just waited. And we actually saw a very similar thing after the first quarter of this year. At that stage, the price of Ethereum from the all-time high was down only around 26% approximately, but from the lowest point back in January to the end of the first quarter of this year, it was up around 66%, which means everyone that was dollar cost averaging, even if you're buying from the all-time high, if you're dollar cost averaging into the market, you could have actually had your entire Ethereum position back into profit towards the end of March, entering into early April, even though the price was nowhere near the all-time high. So once again, legally, I cannot give you personal financial advice, so that is not financial advice. But I hope that explains the concept of how percentage gains and losses actually work, and how dollar cost averaging uses that concept to its advantage. But anyway, zooming into the 12-hour Ethereum chart, and obviously, as you can see here, the price of Ethereum is continuing with this breakout to the upside. And like I explained in my last video that I posted yesterday on the channel, the moment we broke above that sell wall, that level of resistance, where there were a lot of sell orders placed at around that price level, generally speaking, when we look on the other side of a huge wall of sell orders, there's not really all that much sell liquidity in the order books to the upside just above a massive wall of sell orders. So considering the fact that the buyers were able to push through all of those sell orders placed at around 1270 to 1280, it became a much easier task to push the price of Ethereum further and further to the upside, because once again, just above that previous wall of sell orders, there were less sell orders at these higher prices, pushing the price back down. And we could potentially see a similar thing for Bitcoin if we confirm a break above around 22 to 22,500. But as of right now, between Bitcoin and Ethereum, obviously this is only playing out for Ethereum, at least as of right now. And now if we take a look at our Fibonacci extensions, we can see the golden ratio, the 1618 Fibonacci extension, coming into play at around $1,500 per Ethereum, which is currently acting as some short-term resistance. And as I've mentioned in recent videos here on the channel, anything above around 1,500, and I'll be looking towards around 1.7k for Ethereum. And if you want to know exactly why that's the case, check out some of my recent videos where I explained more about that. But if we zoom into the shorter term, taking a look at the 4-hour Ethereum chart, obviously we're still technically in a bullish trend here in both the RSI, the price action, and the MACD as well. So overall, technically we're looking more bullish than bearish in terms of the short-term trend. But with that being said, the 4-hour Ethereum RSI is still currently in overbought territories. And I mentioned yesterday that we're potentially due for a bit of a short-term cool-off, and I must admit that cool-off lasted a lot shorter than I was actually expecting. I was expecting perhaps a cool-off that might last for around a day or so, but instead it just lasted for a few more hours before then we started another leg to the upside. But with that very small short-term cool-off that we saw just yesterday, that did actually cool off the RSI back just underneath overbought territories for a very small amount of time before then we entered straight back into overbought territories. So just keep in mind there is actually increased levels of risk if you're buying something when it's overbought looking in the RSI, because technically speaking, when something is overbought, there is technically more room to the downside compared to the potential room left to the upside in the immediate short term. But once again, technically we have not actually broken the bullish trend as of right now. So in order for this to actually flip more bearish and actually turn into more of a bearish trend on the 4-hour time frame, I'll be looking for those same bearish signals that I've been mentioning over and over again on this channel, which will be lower lows and lower highs in the 4-hour Ethereum RSI and potentially a bearish cross in the 4-hour Ethereum MACD, which currently we have not seen. And if you want to maximize your profits in crypto, make sure to check out one of these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going up or down, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.